2020 was definitely a bumpy year for the overall economy, but real estate actually performed fairly well. In many major metropolitan cities, we saw rent prices decrease, but overall, housing values increased pretty much nationally, and there are a lot of reasons for that. My name is Sue Richey. I am a real estate broker and owner of a residential property management company in the Washington, D.C. suburbs in Northern Virginia. And in today's video, I want to talk about, look at 2020, reflect back on kind of what happened in our economy then, and sort of what are we looking at that we think is going to happen in 2021. So stay tuned. Let's talk about interest rates. Interest rates are at an all-time low and still remain that way. And that has brought a lot of buyers into the market. Investor buyers, owner-occupied buyers. It's an awesome time to finance a mortgage because money is so cheap. The problem, however, is the inventory. There isn't any inventory. Inventory, I hope, will increase in 2021, but in 2020, there really wasn't any, which with low interest rates and a lot of buyers in the market and low inventory, the only thing that can happen is driving the prices up, and that's exactly what we saw. So just as a frame of reference, in 2015, the inventory, the supply of inventory, that means in any given time, any point in time, in 2015, we had 5 months of inventory available for buyers. So if nothing changed and no new houses came on the market, there would be 5 months before the supply was exhausted. Compare that to 2020, it was about 2.4 months, just under half of that time frame, which is pretty significant. So in 2.4 months, with no houses coming on the market, the supply would be gone. That shows you just the difference right there in the supply and demand. And that is exactly why, again, those prices went up in housing. So why was inventory so low? A number of reasons. First of all, the obvious one is the pandemic. People had no idea what was going to happen. So when this all started last spring, people were trying to figure out what to do. Staying put was probably the best option. Nobody wanted to go anywhere. Nobody wanted to get sick. People did not move just for fun. Some people had to move, so they did that, whether they had to rent or they looked to purchase or sell their home. Obviously, some of that still happened, but the normal spring market, the normal turnover of inventory, that was not there, and largely due to the pandemic. The other thing was that even if someone was considering purchasing a home or making a move, they knew that they could get a great price on their home, but then what were they going to do? Where were they going to go? How would they find the next home? And how much would they have to pay for that? So because of that instability and insecurity, people just didn't really move. The other thing was also related to new homes. Building supplies were getting more expensive. They were also getting more difficult to get. And so that pushed back new homes, the delivery of new homes, and also pushed back the amount of inventory that was coming into the market. So personally, I dealt with this a lot last year. I had a number of properties that I listed for sale, and we got well above asking price on pretty much all of them. And of course, those sellers were very, very happy. Now, the buyers I worked with, we did eventually get people homes, but we went through multiple contracts, had to write multiple offers, and eventually got those homes. But it has definitely been a challenge on the buyer side. Now, separately, 2020 brought a lot of hardship to a lot of homeowners. People lost jobs. Obviously, we all know and have heard a lot of this on the news. But what that means is that the mortgage defaults have gone up considerably. In 2020, about 3.6 million defaults occurred on 90 days or more of delinquent payments. So that is about at the highest we've seen since 2009, which really is going to tell us something and tell us something about what might come later. There were mortgage forbearance measures in place to help homeowners stay in their home. We had eviction moratoriums on the rental side, so nobody was kicked out of their homes, but that can't stay in place forever. Right now, those mortgage forbearance is going to end in March. There's probably going to be an extension of that from the administration. We will keep an eye on that, but at some point that's going to end, and at some point those homeowners are not going to be able to pay those mortgages, and foreclosures are going to start to happen. So you hear a lot of people in the real estate industry and a lot of people on YouTube talking about an impending crash. I think we're definitely going to see a decline at some point. A lot of that depends on when are these mortgage forbearance measures going to run out, when are we going to see the economy picking up, our jobs, the vaccines. There's a number of factors that are going to affect this, but at some point I feel like there is going to be some sort of decline. Now let's talk about rentals. Obviously in my company we do sales and rentals. A lot of what we do is rentals. Now in our area in Northern Virginia, we have not seen a decline in rentals. In fact, last year there was about a 3% increase in the rental prices. However, just 20 miles in town, in DC proper, those rents have declined by about 8%. We've seen a lot of people moving out of the city. That's true for cities like New York and other major metropolitan areas. People are just getting out of there. And for some reason, we're seeing much more movement out into the suburbs. That may change eventually, but for now, that's what we're seeing. The other thing is that during this pandemic, many landlords were just happy to have a paying tenant in place, so they didn't increase the rents. People stayed in place, so there wasn't a lot of movement or activity in the rental market itself. I think going forward for renters and for landlords and also for investors, I think we're going to see some opportunities. So if we do see some foreclosures coming into the market, that's going to create opportunity for buyers. Now, I hate to always talk about foreclosures. That's obviously a hardship on someone, and someone is gaining something from that, but that's just the way it goes. And hopefully there won't be a ton of foreclosures and people can keep their homes, but if there are, someone is going to buy them, and that's where the opportunity is. So I think if you're an investor, it would be smart to position yourself financially and get all your ducks in a row so that when these opportunities do show up, you can snap up some of these good deals. Also, I think that there are a couple of reasons why people may continue to rent continue to rent versus buy. So we already know that millennials and some of these younger generations are buying homes a little bit later than some of the older generations. That's kind of been there. But the other thing that has changed as a result of the pandemic is that remote working is now really a thing. Many companies who did not offer working from home, I think we're going to see a lot more of that, and people are working from other states, from other parts of the world. Why are they going to buy a home and tie themselves down unless they want to do it as an investment? We're going to see more people renting to give themselves a flexibility to do whatever they want to do, move wherever they want, when they want. With more renters in the market and with some potential foreclosures or, eventual decline in the real estate market, there's going to be opportunities to pick up investment properties. You match those up with a large pool of renters, you've got a really good scenario there. So I think we're going to see some of that, and I think for investors, there's just positioning itself well to do that. So that's kind of my predictions on sort of a look back, but also a look at what's ahead. I think there's opportunities. I think we're going to see some sort of a decline. I think 2021 is going to be, at least for now, for the next several months, 6 months, it's going to be pretty much like 2020 was, but we're going to start to see just some changes. I want to know what's going on in your market. Like I said, in my market, 20 miles has made a big difference in what's happening in the rents and in prices. Tell us about where you live and what's happening in your economy. Are you seeing prices increase? Are you seeing rents increase? Are you seeing opportunities for you as an investor or a landlord? We want to know, so share those below. And if you like this video, I hope you'll share this with other landlords and other people who could benefit from this information. So thank you for watching, and I'll see you next time.